Yeah, I mean it does, and I think that does. And then you take 3,000 and divide it by 42, which has been the average price ratio of the last 100 plus years. You get 71 and a half bucks. Divide it by 7, and you're almost to 400. That would be what it's coming out of the ground at.
Welcome to Economy Express, your go-to destination for all things economics and finance. Whether you're an experienced investor, an inquisitive student, or just someone who wants to stay ahead in today's ever-changing economic landscape, you've come to the right place. Now, let's get into the details of our news.
In economic news, there is growing potential for silver prices to reach triple digits in 2024, according to bullish predictions from analysts. Various economic factors are driving this expectation. Historically, the average price ratio of silver to gold over the past century has been around 42. Based on this ratio, current projections suggest silver could reach $71.50 per ounce. In addition, there has been an increase in premiums for silver eagles, indicating rising demand and tightness in the physical silver market. Analysts from J.P. Morgan and Bank of America predict significant price increases for both gold and silver. J.P. Morgan foresees an 8% to 10% upside, while Bank of America anticipates gold could reach $3,000 per ounce. The U.S. economy is facing challenges with rising national debt, unfunded liabilities, and potential fiscal instability, driving investors towards safe haven assets like gold and silver.
This is rather, for sure, the beginning of the year, and now maybe one. And if they do that one, towards the end of the year, it just reeks of it being politicized to keep the Democrats in office, to get that run-up of the market prior to the election. But yeah, I think those days are long over. Like I was saying earlier, how do you pay these unfunded liabilities? Where does the money come from? You're creating $1 trillion in debt every single month. How is inflation only at 3%? Where is it holed up? Is it all in the equity markets? Is it in the treasury market? Where is it? And when it finally starts to rear its head in the real economy, it's impossible to say that inflation will get down to 2%. I can't believe it. I don't think if you go back and look at their numbers over the last 30 years, they've been at 2% more than once or twice. Most of the time, they're over 2%, even by their own flawed metrics. But yeah, I would agree. Zoltan Pozsar is a genius. And yeah, I don't think that we get inflation anywhere near 2%. If they were really honest with their inflation numbers, it would be a whole hell of a lot higher. So if they do pivot and lower rates, it only reignites that inflation engine that is already higher than 3% for what they're trying to get us to believe.
Well, he also mentions one other interesting thing down here. These topics are becoming more mainstream. When I talk to most sophisticated macro hedge funds and investors, the common refrain that comes back is they've never seen an environment as complicated as this. There's consensus around gold, it's a safe bet, and everything else is uncertain. Now, certainly by all means, I don't think everyone in the world is looking at it like that, but interesting comment from Zoltan. And as I've mentioned in previous Andy Schectman retail silver and gold physical market updates, that I enjoyed going through that World Bank report, and there was one other comment that I had pulled up here that ties into what we just heard from Zoltan, where, again, this is from the World Bank, who I might add assisted in the creation of Zimbabwe's gold-backed currency. So they're active these days, did that, and had time to write. There's an argument that in the aftermath of Russia's supply-side crisis and sanctions imposed on Russia, the world is transitioning from the Bretton Woods era, which was backed by gold bullion, to Bretton Woods II, which was backed by inside money, to Bretton Woods III, which was backed by outside money, as Zoltan Pozsar described in 2022, and the outside money being gold bullion and other commodities. And the belief is that Russian sanctions create incentives for central banks to abandon the dollar in favor of gold and for governments to cash in their dollar reserves for stocks of other commodities. So we're seeing some of that happen in terms of some other central banker thoughts. So again, not my opinion here, but this was from the World Gold Council. They did a survey of 70 central bankers. Here you see, what proportion of total reserves do you think will be denominated in gold 5 years from now? and 68% think that the amount of gold is going to be higher. So,
yeah, I believe that. I mean, I think it's you look at the amount of gold that China's been accumulating, and we're only supposed to believe and producing that they have 26 or 2,700 metric tons. They have way more than that, and their banks are accumulating it, and doing so in a manner that isn't reported to the IMF. Why would anyone tell the IMF exactly how much they have? And people have been saying China's been underreporting it forever. And you look at the central banks; they are buying gold hand over fist. But also equally as impressive to me in terms of the big picture. And by the way, I apologize to your guest because I watched the video 5 times, and I don't have his name, and I owe him a phone call. But it was one of the best videos I've ever seen in a very long time. The guy's real smart about Enbridge and about the unit, and I've learned a lot from him. And thank you, and I owe you a phone call. What's his name?
Matt Riley.
I suggest everyone watch that video. It's very eye-opening, but you look at like ICBC Bank and a few of the other state-owned banks. They buy gold as a proxy on behalf of the PBOC. They work at the refineries all around the world. They don't tell this to the IMF. It's not reported. Everyone always said China underreports. China.
Globally, there is a trend of moving away from the US dollar and treasuries towards alternative assets. Many countries are seeking to reduce their USD holdings. Central banks worldwide are increasing their gold purchases, with record amounts being bought in recent years. This trend is expected to continue, contributing to higher gold and silver prices. China's gold accumulation has been significantly underreported, with estimates suggesting they hold much more than officially stated. This is part of a broader strategy by many countries to bolster their gold reserves. The combination of increased central bank purchases, underreporting of gold holdings, and economic uncertainties is leading to a bullish outlook for precious metals. There is a growing loss of trust in traditional financial systems and instruments like U.S. Treasuries, prompting a shift towards tangible assets like gold and silver. Many countries are repatriating their gold reserves from foreign banks, further indicating a move towards securing physical assets amidst global financial uncertainties.
Under reports, but now we're supposed to believe him, right? Alistair McLeod says, that they have 40,000 metric tons, or thereabouts, 5 times what we do, and of which the state owns, 20, and the people own 19. But I look at like India as an example of what's really happening. They bought 1.5 times the amount of gold in the first 4 months than they did in the entire year last year, but they repatriated 100 metric tons from the Bank of England, which by proxy is the London Bullion Metals Exchange. And all of these countries in Africa, including Saudi Arabia and Egypt, have repatriated their gold from the New York Fed, i.e. the COMEX. So it's not only the accumulation by the most well-informed traders, it's also the repatriation, the removal of counterparty risk. And that's a lot, I think, what Zoltan Pozsar is talking about. That's why it's commodities. We've broken trust. And I think that's the most important thing. When the central banks say we're going to keep buying, sure, I would argue that the numbers that we all are led to believe are way underreported. The IMF says that. The analysts at Bank of Montreal says that. And everyone has said that about China in particular for years, going back as far as I can remember. So I would simply say that there is no reason for gold to have been reclassified Tier 1. And when you see, other than that it's significant in terms of where it's going. And when I say gold, silver is part of gold. And as one goes, so too will the other ultimately, for different reasons now. But they're not going, one's not going to the heavens without the other one coming with. But I think when you see the repatriation, it speaks volumes. It's about the loss of trust. This is what it's all about, the loss of trust. And can you put Humpty Dumpty back together? Don't know. The trust is something that I think is very difficult to get back once you break it in any form of life, whether it be relationships or, in this case, the world reserve status or the center of free trade. People look at this country differently now, in many ways. And I think, maybe the most important way is the risk of having assets in treasuries as savings. Instead, they're looking at commodities, which I think have no counterparty risk, and the relevance of how important they are moving forward. I think Zoltan nailed it. So yeah, it doesn't surprise me the central banks say that, and I would argue that they're buying way more than they're telling us, and producing more than they're telling us. So, tell us just enough to keep us interested. But if we really knew how much the Chinese were buying or any of these countries, the price would go parabolic. And it's in all of their best interest during the accumulation phase to be tight-lipped about that and not be genuine. Doesn't do them any good to do that.
Well, I hear you, and perhaps we'll find out how much gold China really has one day. Would be hard to imagine what they could say that is similar with the U.S., where you actually fully trust the answer. But either case, we'll see if we ever get an
Only
answer.
time will tell, brother. You're right, as always.
Andy, last thing in wrapping up, anything you could say about what's been going on with the premiums on retail lately on gold and silver?
Well, what I will tell you is that, and it's interesting,
Analysts and experts, including Andy Schectman, believe that the prices of gold and silver could rise significantly higher than current estimates. Silver, in particular, could potentially reach triple digits in the near future due to ongoing economic and market trends.
Part of the reason the premiums were so cheap for the last several months has been the overhang of backdated items, where for the first half of the year I didn't sell anything. 2024 we had so much stuff from previous years and a lot of people selling. That's for the most part gone, and you can't find much in the way of backdated material anymore. That would be step number one. Silver Eagle premiums have been on the rise. That would be step number two. I would say that the premiums are just about ready to start moving. They've moved up a little bit, but the tightness in the physical market, in terms of secondary product, we've seen kind of a ceasing, if you will, of the sellbacks, and now it's moved now to people are buying again. But you don't find those really, really great deals on the backdated stuff that we've seen. I would still say that probably the best value, period, bar none, would be junk silver, pre-65 dimes and quarters, because it seems as though that's the one item that hasn't kept up with the sovereign mint coins recently, and through most of the pandemic was only second to Silver Eagles in premium. And most of the time north of $10, $11 over spot, and now you're buying it at well under $2 over spot. So if I were buying anything right now, that's what it would be, because the premium on that has yet to match those of the sovereign mint coins, which is really kind of confusing. I can't explain it other than to say it is the way that it is. But yeah, whether it be big stashes of 100-ounce bars or backdate sovereign mint coins like Maples and Eagles and Philharmonics, it's all gone.